Hi, I'm Pattu from FreeFinCal, and these are 9 momentum stocks with low volatility for 2019. So, what is a momentum stock? A stock that has increased in price over the last 12 months is last 6 to 12 months is defined as a momentum stock, and a low volatility stock is one in which the daily price fluctuations, the daily returns, stock returns over the last 1 year are relatively low compared to the the whole set of stocks that you're comparing with. So now these are 9 stocks with momentum, that is their price has increased, but the volatility also is low. So these are 9 stocks for 2019. I have shown earlier in another video that momentum. I explained in more detail what is momentum investing and whether it works in India, and it works wonderfully in India. I have also explained the importance of low volatility stocks and why low volatility investing is a wonderful way to get higher returns at lower risk. And this is a combination of both momentum and low volatility stock selection methods. Viewers must understand that this could be a high return, potential high return with a high risk strategy. And if you are going to take up momentum investing, you must have the clear understanding that you will invest in a stock with high momentum, but the moment it drops out of the high momentum list, then you should be ready to sell it and buy another stock. So I have chosen the Nifty 100, the top 100 stocks in the NSE, for selecting momentum stocks with low volatility. And last month I published my first such list for November 2018, and today I have published the December 2018 list of stocks. So essentially these are stocks for 2019. So let's just go straight away to the screener. So this is the stock name, the standard deviation of daily returns. That is, the standard deviation is a measure of volatility. Let me just add one more decimal here. Sorry. So that looks a little neater. Whoops. That doesn't seem to work. Okay, forget that. So that's the standard deviation of daily returns. So that just tells you what is the volatility of daily returns. This is the last 1 year return, the annualized return. And these are the number of daily returns considered. There are 225 except Sun TV, which I don't know why it's got only 52 returns. But anyway, it's got minus 36% return, so we don't want that. So, and we're also looking at the number of, out of these 225, how many returns were positive. That is, the daily returns were positive. So the more number of positive returns, the more momentum, the momentum is justified. That is, you have when you're looking at the CAGR, you're only looking at the price 1 year ago and the price, the last traded price, but the journey also matters. So if more daily returns were positive, it means that the journey was more smoother. So it's a measure of volatility. So first thing is to, there are 101 stocks. So first filter is to demand that the return should be greater than 0. That's it. And so that leaves us with, let's see how many stocks. So this is like 30 stocks. That leaves us with 30 stocks straight away. So like 71 stocks had less than 0% return. And the next selection is, we will demand that the percentage of positive daily returns is at least 50%. So greater than or equal to 0.5, and that's 50%, and that drops down the list to 19. So that's 19 stocks. And then you can further demand, oh, now you have the additional decimal points in the standard deviation. I'm getting used to, this is Mac Excel and it's kind of weird. So anyway, so there's one more filter you can do. So you can, let's find out the median or the midpoint of the 19 stocks, the median standard deviation of the 19 stocks. So let's just look at that. And that is about 1.649. And so we will select all stocks with a standard deviation lower than the median. That means that we are looking, so we have a set of volatilities, and we are looking at the bottom part of the volatility, and the standard deviation uh, divides the distribution into top part and a bottom part. And so the bottom part is all the stocks with the standard deviation less than the median value, median standard deviation, and these are your 9 stocks. So these are the 9 stocks. Let me just shade them out. So Pidilite, Marico, Infosys, HDFC, Kotak Mahindra, Britannia, HUL, Colgate, and HDFC Bank. These are, of course, all large cap stocks, and these are stocks which had exhibited momentum over the last year, and also low volatility, and also at least 50% of their daily returns were positive. So that's again a short list that a new investor can consider. These are all fairly decent companies to invest in, I think. But please be clear that this momentum low volatility list will change every month, and if you follow a certain procedure, the entire file is available for download. But if you follow a certain screening procedure, and you must stick to that screening procedure, and if a stock is falls out of that short list, then you must be ready to sell that stock and buy a new stock as a replacement in your portfolio. If you are not going to do that, if you're not going to adopt such a strategy, then looking for momentum and low volatility stocks may not be of much use. You will end up only cluttering your portfolio. So I'll catch you again in another video. In another video, I'll talk about how you can create this filter on your own without waiting for the free fin calculus to come out. So I'll talk about that in a video. Catch you again later. Bye.